Hey everybody, it's Dave with Dave's Trades. I just wanted to update everyone on the positioning of my account and where the overall market sits in uh, my opinion. So we did get overextended, just like I had said in my last video, and pull back to this line. We're basically at the first support right now. I am still in the VIX as of now, and we hit the top of this pattern on the RSI. And on the MACD. So if you come and look at this pattern, we've been coming up and hitting this descending resistance 1, 2, 3 times. This is the fourth time we've hit it. On the RSI, it's only 2 times, and then this is the third time. We literally hit it perfectly, and then we started selling off. I was watching this Sunday and Monday over the weekend, and the Monday session. This is screenshots from my phone. On my phone, the compression rate's different, so it shows the MACD broke out. But if you look at Thinkorswim desktop version, it never has. MACD. It never has. So I think that's just a false signal. So that's why I like to check it on the computer also. And then here's just another screenshot of where we were at when I took that positioning. I did sell some shares today. I wanted to go over those stocks and which ones I got out of completely. I did have most of my positions, so I just took profits. But when the market's overextended and you see patterns like this, it's a really good time to start taking some profits, especially when it's such a divergent high and the stochastic is overextended. So let me just go in here and I can read you off. Okay, so the first one was EXPI, and we covered at $80.40 this morning. If you're familiar with EXPI, we had a reverse stock split today. Or a stock split. No, I'm so used to trading ETFs and the price goes the other way. So we had a stock split today, and 1 for 2, 2 for 1. So for every 1 share you had, now you have 2 shares. So they split it up. A reverse split is like for every 5 shares you have or for every 4 shares, they'll change it into 1. It's like a reverse. You're reversing the split. So this time it's split into 1 into 2. So, and we were super overextended before that. So I just took some profits off the table. I just sold half of my position. I got out at $80.40 this morning, and I'm going to wait until we come down to $59.83, and we'll start looking at a buy around that level. By the time we get there, the 180 simple moving average that I use, that's usually common support. I'm hoping that will actually get up here, so it may take some time to get down to 59.83, but until we hit about 60 or below, that's really where I'm looking to buy, is around this peak right here. So we'll see what happens with that. The next is Twitter. Twitter's actually gone up since I sold it, and this was a position that I think I got out of everything that I owned on this stock because we were just so overbought. We're at 87 on the RSI, which is insane. So I was buying the stock, I believe, around in the 50s. So in this mess, I may have gotten in before. Let me go back in here and look. I'm pretty sure it was in January. Let's see here. There it is. I bought at $47. I bought $47 and $47.72. So I was buying at 47. No, not the exact bottom, but pretty close. I hate when those go off. But yeah, we're just super overextended. We got a lot of green. Got this gap right here. We're just, it's a great time to take profits. I'm not at all going to short Twitter, but it was a really good time to take profits. Also, when the S&P is looking like the pattern that we're in, I mean, if the S&P breaks out, I'm all for it. But like when we're at 87, that's not what I want to buy. I want to wait until it comes back and like hits the 9 at least. So like maybe when it comes back to like 67 to 60, I might put in like a 20% position, and then like maybe another 20% at 56, and then like the rest at 44, and then we'll see, and maybe I'll average up as it goes up. But these are just going to be really small buys. Every single support that it hits, probably be about. So down here, I'll probably be about, I want to say like 50 to 60% invested, and then we'll see if we get a bounce. Yeah. Usually, I just trade based on my risk tolerance, my account size. So you'll know the buys when I get there. I don't want to be like, oh, I'm going to put my whole account into Twitter at $50. So that was another one I sold this morning. I got out of was Twitter. Another one was Wynn Resorts, and it's actually gone up since I sold it. So these are, maybe not good sells. So don't ever follow me. Just these are for entertainment purposes only. We still have yet to come back up to the pre-COVID highs, but with the S&P looking the way it does and this being so overextended, it is on an uptrend, but it's also hitting the 200-day or the 180-day. So I'm just going to give it some time. I mean, I caught this bounce right here from, like $100 to 122. So I mean, I've made just about 20% on this stock. Like that's quite good money, and it's really good to take profits. So we're not exactly down here. We're not like crazy good deals to be buying. So we'll just keep looking at Wynn. We'll see what happens. If we start coming up on the 200 and we make higher highs and we come back and bounce on it, I might get in. But until that happens, looks like we're at a long-term resistance right here. And let's not forget that COVID's not over, and these resorts aren't really making profits like they were. So if you come in here and you look at all these earnings, I mean, we got $1.68. 75% dividend, $1.06, $1.60, and then negative. So maybe when they start generating some revenue, I can justify these high prices. But otherwise, I'm just going to buy it when it's on sale. But credit to everybody that bought it at down here in the 30s and 40s and able to ride it up to 120. That's an amazing trade. So we'll just wait and see what happens with that. Next one's going to be SFT. This is Shift Technologies. Basically, just bought off the support and selling. It was just a really good play. We're coming up on this resistance right here, and we're getting rejected pretty hard. It was a support. You can see back in here. I know this is a weekly chart, but you can see things clearly if you go back far enough. Sometimes I even like looking at the monthly chart. I don't really ever look at the yearly chart unless I'm looking at like the S&P 500 futures. I'm like trying to map out like what happened since the 80s. Like if we go in here and we just an example, I think it's on my other account, but we'll go in here and do the. I think we did the max available and month year right there. Okay, boom. Let's see if that loads. Hopefully my OBS is recording. Yeah, okay, cool. Because this froze earlier. So, I mean, that's a lot of data. It's literally getting like every single price point throughout the entire max it can. Not the entire thing, because obviously it's not going to get back into like the 1930s. That'd be insane. Okay, it's not loading. So we're just gonna go back to short. But anyways, I did use that. I'm sorry for leaving you guys hanging. I was literally waiting for it. I just waited a little too long, maybe. But yeah, my internet's not letting it load. Maybe I'm using up too much RAM. But we pretty much just, we're looking for the bounce here. Where are we gonna bounce? We're gonna, it looks like we're bouncing off of 3922. We'll see if there's enough buyers to take us up to a new high. If not, we're probably coming back to 3882 area. Bounce there, take us back up. We'll see. In that case, if it doesn't happen, we're going down to 38. 38 is the next support, and then we got the 180 day, which may catch up here, and we could get a bounce right there. That's what I'm hopefully scenario, so we don't get like a, excuse me, I did not mean to do that. I don't have my mouse right now, so I have to use this crappy laptop pad. So yeah, we're basically just waiting to see what happens. We're at 52. If we don't get below 50, we might still be in an uptrend, and we could just bounce off of here like we did last time, and then continue to make new highs. That is completely possible. Or we could come down and bounce at the 180 when this catches up. Or we could come and hit the trend. Excuse me. We could come and hit this trend and then keep going because we are still in that trend. Or, oh man, there's so many ors. Or we can come and hit this green line. And if we just smash through all of that, we still have support. Rupture. This is the channel from 2008. Let me see if I can go back and do like we'll do 20 years, and we'll do weekly. All right. Thank goodness. So this blue line right here, that's the top of the trend from 2008. So we still have not come back and confirmed that we're in an uptrend. So we could, honestly, in a healthy market, what we should do is come back to 35 and then continue to make higher highs. So like this green right here, this 3 greens right here, these 3 last weeks, this sucks in a bullish, crazy bull uptrend because it's not that much of a pullback. If we would have come back and bounced on right here and then continued up higher, that would have been so much healthier. But since we continued on, we're getting more overextended, and we're coming in and hitting this resistance on the RSI. MACD you can't really see on the weekly, but we're in this compression right now, and we could totally blow up. I mean, we could have a blow off top, and this thing could go to like 10,000 because they started printing money here, and if COVID crashes like the 2008 2009 financial crisis, and then they have like QE and all that stuff, and go up 5x. I mean, 5x from point down here, that's 10,000. So anything is completely possible. I'm not gonna predict the future. I just play the patterns, and the patterns telling me that we're overextended. There's not as many buyers right here as we would hope for such an overextended market. We're not really moving up like we were, but we are holding supports, so we are clearly still in an uptrend. We're just basically looking for support. This is a pullback right now. This does not constitute a crash. But if we come down and break all of this, like we come down and break 26, then look for the crash. But I know some people are going to be like, oh, but from 4,000 down to 26, isn't that a crash? And it's like, it is, but it's not breaking the pattern. This right here, we only crashed for like a little bit. What is this, like two weeks? I mean, we broke the pattern for what? For 2 weeks, and we barely lost how many points approximately in these candlesticks. So we only lost 254 points. And we did not break the trend from 2008 because the Fed stepped in and the Congress stepped in. So they know that this trend line exists, and they know that this is the shitty thing they're looking for. I mean, I want to buy down here, honestly. If the S&P ever gets back to 1500, and we have that lost decade, like all the crazy people are talking about, and we come down here, like that'd be amazing. But do you see the dollar strengthening and we're coming down here? No. We'll see what happens in global financial markets. But as of now, this is like my just absolute worst like crash scenario is 2800, which honestly 2800 is not that bad to buy into. It is bad when we're coming from 4000, but it is possible because we have not come back and tested this trend, and this is the main uptrend from the COVID crash or the crash. So we'll really see what happens. We'll see when we pick up support. But for now, we're trapped in that pattern, and we're waiting to see how it plays out. I just wanted to update everybody on some positions that I have and closed out. I'm still my Bitcoin position. I have not touched that. As you guys know, if you trade crypto, there's only so much Bitcoin. So I've been buying it since like quite a while. And I have not sold anything in that. I may do a Bitcoin video here in the near future to review the charts, but that's another subject. Right now we're talking about S&P 500 and U.S. companies. So another one that I sold was the AA. It's an aluminum manufacturer, Alcoa Corporation. Basically, I just bought it off Sport and came up. So we're at a high, but the RSI is not overextended, and neither is the MACD. So I only have my position in that. I got out at 22.35, and it is currently at 22.37. So that was a good price to get out at. It looks like Airbnb is another one. Jeez, my fingers. It's another one I sold. We're basically just coming up and hitting resistance and coming out. So I only have my position because, as you guys know, I actually got in on this bounce down here. So I'm just waiting to see if we come back below 200, and I might start buying again. If we can come back and hit 189, 190 area, that'd be a very good opportunity to start in. Another support would be the 173 area, and then of course if we come back to around 155, I'll buy everything I can get my hands on because I love Airbnb stock, and it's a really good company. They have almost no debt. If you've ever used Airbnb, the app, you can rent out a whole apartment for like as much as a hotel room, and it's amazing service. So really looking forward to this company long term, and I think it's great hold for the time being. Another one that I have my position in is CCIV, and the only reason I did is we're just super overextended, and we're making divergent highs, and I just feel like we're going to start fizzling out here pretty soon. You can see the stochastic is starting to flip over right here. And it's just an oscillator, just lets you know when bullish and bearish momentum takes over each other. So like right here, bullish momentum failed and bearish momentum overtook. And then right here, bullish momentum overtook the bearish momentum, and then we bounced off each other and we trended higher. And right now we are at an inflection point, so we'll see where the momentum lies. Just so you guys know, this is Lucid Motors, but you're not really buying Lucid Motors. It's just a share of Lucid Motors, and this company's going to own it. You don't know what this company's going to do with the shares once they get them. It's basically up in the air, and it's a total speculative gamble. But I was up quite a bit, so I took some profits just to make sure. Excuse me. I took some profits, we're just overextended. It's a great time to take profits, and you never go broke taking profits. I still have half my position open at an average of let's see here. 21.67. So not overall the best price. I got in this craziness because I got the alert that I was going down here, and my buy price was the 9, so I was just getting in anywhere I could. I was quite a few buy, but the average price is 21.67. Buy the average price. All right, so those are all the stocks that I thinned out today. I totally got out of Twitter though. I sold all of my Twitter, and I sold all of my Wynn Resorts. Everything else is basically just taking profits, and I'm still in it to win it. Look forward to hearing about my M1 Finance account, my 2030 M1 Finance account. We'll be uploading a video on that later on today. If you have any questions or comments, go ahead and leave them down below. Let me know where you think ES is going and what your trades are. As of now, we're at this resistance or support. Old resistance turned new support. So we'll see if we can bounce and then continue to make higher highs. I'm going to put in an alert up here, and I'm also going to put in a support resistance trend line so we can map it out for this. Boom. Okay. All right. This is Dave's Trades. Remember, just keep going.